Good afternoon, everyone. Welcome to the FX Hour for Shadow Trader. I am Blake Young, here every week at 4:15 Eastern when we talk about all things Forex. And certainly this is a week to be here, isn't it? Or is it? We don't know. We'll talk about it here in just a minute. So hopefully you're all having a great week, and you had a great week last week. Thank you for your patience with the previous week's technical difficulties that we had. But we should be here, good to go, and for today's hour. So thank you for being here, and remember you can follow us by going to MyTrade. Go to MyTrade and look for all the Shadow Traders. You can follow all of us, get the calendars, newsletters, updates, etc. that are available through this page. Also, this is recorded and will be posted to the shadowtrader.net website under archives under FX Hour. So you can also join us or follow it or watch the recording afterward there. Let me switch over to just the chart so we get a much better image. And let me get a consensus as well. When we are looking at the euro and possibly, as everybody calls it, the Grexit, the Greek exit, we're looking at this and it looks like they voted and they're going to restore their pensions. They're not going to meet their debt obligations and probably preparing for the exit. My question for you is, when we're looking at that, what impact will that have on the euro? Because either it's priced in, which we think the markets are pretty good at that. Markets are pretty darn good at pricing in expectations. Either they're expecting the euro to, or they've already priced it in, and they expect Greece to exit. It's about 1%, or it's a foreshadowing of things to come. That's kind of where it comes down to. It's a vote of confidence or a lack of confidence against Draghi and the ECB. Or it's, who cares, it's just Greece, they're out the door, they're about 1%, they're less than any major, really almost any state in the U.S., and it's not a big deal, we don't care. And PR says, entices others to follow, league value, what are we looking at? And so as we're watching these, I think we're seeing that the market has priced in the struggle, but not priced in the exit. And so if the exit does occur, I think people are still betting on that they'll offer something else. They'll offer something else because that's what's happened in the past. But we can see initially the response from the equity market, initially the response from the world is to be fearful. And we pushed down here. And I do want to come back, not to strain my arm with patting myself on the back, but I told you last week, if you watched the recording or if you heard what little time we had live, that this was the bounce that we expected. And I said on Tuesday that we would expect it to bounce, and this was our Tuesday candle right here where my cursor is, that indecision candle. I said we'll bounce, retest these highs, and roll back down. You remember? We called that one, it came down, now it's bounced here. Now, where is it going to go? Is the U.S. going to be the safe harbor? And so this is a question that I got from Onnits before, and I'll address this. I don't know if Onnits, if you're with us. But one of the things that we look for is I watch for where the money is moving. The money is going to move one way or the other, and it's going to move into either, yeah, we'll hit that as well. Either it's going to be moving into equities, moving into bonds, moving into commodities, or into cash. Generally speaking, those are your four major instruments. Now, cash could be an individual currency, or simply all currencies are kind of gaining strength or purchasing power. So, hey, there you go. And so this is kind of the conversation that we had a little bit of that last week, but no one could hear it unless you watch the recording. But this is what I'm talking about. I believe you can watch for the money to move, and money is going to move one way or the other. The old adage of, the energy can either be, or energy, matter can either be destroyed or created. It can only be altered. That's kind of the same thing that we're looking at in currencies, except we can actually create more currency. But generally speaking, you are not going to ever see a country pull currency out of the market and destroy it. They are not going to destroy currency. They may pull it out of the market, but it's still there. It's in their coffers. It's waiting for that opportunity when they need to use it again. And so as we're watching all these moves, these ups and downs and the changes, we're looking for this, and we're watching for money. Yeah, energy never dies. We're watching for money to move from one place to the next. Can I up the sound a bit? Yeah. I apologize. Is that better? Can everybody hear okay? Is that a little bit better? Hopefully I just didn't blow out your eardrums when I turned it up. I can turn it up a little bit higher as well. Is that better? Now a little bit hot. Let me bring it down just a smidge. How about there? Good? Tuned in a little bit? All right. Now, that's good? Right there. Okay, good. Thanks. All right, so as we're looking at this and we're looking at these moves, the question is, where did it move? Now, JY, dollar moves into other assets, gold, silver, etc. Right, and that's what I'm saying. Think of it. Don't think of it just the dollar, though. I want you to think about it, those four things that I just mentioned. We are talking cash or money markets, cash as individual currencies. We're talking equities, and that can be individual countries' equities or generally all equities. We're talking about commodities, and I will lump gold with the commodities. Occasionally you won't see gold move with the oil and other things. It depends on if it's a hedge of inflation or if we're actually seeing inflation. And bonds. You're right. Those are the four that I look for. And so if I see one move or another move, it tells me it had to come from somewhere else. If something goes up, it had to come from somewhere else. So starting off with, we have the equities, and here's the S&P. And as you can see, U.S. equities came down, tested this low, maybe shot a little past it, but you can see it's toying with these shadows down here. We've been here before, it tested that area, and you saw the chart that Brad was talking about. You saw what everybody was looking at. Your UVOL was straight up all day long, just a constant increase from the initial drop all the way through the rest of the day. We saw money moving into U.S. equities. Great. I've got that, marked it down. Money moved into U.S. equities. Fantastic. The question is, where did it come from? As we go over and look at the bonds, starting out with the U.S. bonds, are the U.S. bonds seen as safer than what we saw or see in the Eurozone? You're blasted. I can turn it down a little bit more. We can try to balance it out here. So as we're looking at this move, what do we see? Did the money leave U.S. bonds? What do you think? No, we retested the highs. Back up it goes. So U.S. bonds are the ones that are acting as a little bit of safe haven against the European bonds. So we know that money moved into U.S. equities and U.S. bonds. All right, fair enough. That means we must have had money leave the dollar. But when we look at the dollar, did it really leave the dollar? This is the dollar against multiple currencies. Didn't really leave the dollar? No. The dollar didn't gain a lot, but it didn't leave the dollar. So it leaves us with a couple of things. It didn't leave the dollar. It went into bonds, but not a lot, and it went into equities quite a bit. And so we're really left with commodities and individual currencies. That's really our choice. And so starting out with commodities. Let's start with the DBC, Deutsche Bank's commodity fund. This is the commodities that are balanced against the US dollar. You can see it didn't go across the board there. And so we go and say, okay, well, it's not there. What about crude light? Individual commodities. No, crude bounced. Well, was it an inflation hedge? And as we walk through here, oops, illegal use of the GC. So you walk through here, here's gold. A little bit of money left gold, but not a lot. So where did it come from? It came from the Eurozone. Remember that the US dollar and the euro, right through here, US dollar and the euro, is a representation of about 60% of all trades. When we're looking at this, this is representative of about $2.5 trillion a day. So this little move down is $2.5 trillion a day. That's the entire bond market and some. That's the entire bond market and U.S. equities. So the move down on the euro-US dollar is one of those situations where we would say that move is equivalent to all the U.S. equity markets and all the bonds combined. Exactly. And sometimes it goes almost instantaneously, goes from one commodity into cash, from cash back into an instrument, back into equities, out of equities, into cash, into bonds, and it's done instantaneously or in a very short period of time that you don't even see it. You know, money, yeah, it could be blamed on a dairy auction. Let's look at some of these individual commodities. We saw that it wasn't there, so you look at the individuals like Ellie. No, I mean, it's gray. It's a gray candle. Cattle did not move. You look at coffee. Coffee futures gapped up and then traded flat. So we really didn't see commodities really move. The pound, up it went. So it didn't move as individual commodities, but when we look at this, we say, oh, money left the Aussie. Okay, well, money left the Aussie. Back to your comment on the dairy. Well, a little bit down on the New Zealand, a little down on the euro. really relatively flat. Sugar. You know, I haven't looked at sugar in a long time. Oh, soybeans, sorry. It's Z. Is it Z? ZC's corn. What is sugar? Now that I'm drawing a blank. S soybeans. See, now I can't remember. Sugar. SB, thank you. There we go. Oh, look at that. I haven't looked at these. There it is. So money moved into equities, but possibly most of that just went into cash on the weekend. Right? And so that means when the dollar isn't strengthening a lot and a currency isn't selling off, that means it was truly sitting in brokerage accounts in the dollar. Not enough to strengthen the dollar while it sat over the weekend, but enough to cause equities to go up and bonds to go up after the weekend was over. People truly went into I'm on the sidelines and not moving. Now, WX says, Blake, if we just consider Greek repercussions, no one is really talking about political unrest in Greece stemming from results of economic shock if Greece leaves the EU and can no longer borrow. We have seen both the Greeks are capable of this, and they are readily spread to other countries such as Spain and Portugal and Ireland and Italy, right? I'm adding a little bit more. But one of the things that we would look at is we might look at that and say, okay, if that's the case, where are they going to go? And I just did that wrong. Let me try that again. You still there? The idea, the philosophy is that Greece may not just walk away. They may leave and go join and be part of the Russian ruble. And so if we're looking at that situation, the question is, can we see that? Now, does anybody watch Spurs Bank or other things like that? Rebel. Hey, you Fred. Let's take a look here. Since we couldn't get that pull up, let's look at... see if we can get a ETF here. Breaking up? Okay. Let me clear this. I was using up a lot of bandwidth here. Give me 2 seconds. We'll clear out the... So the question is whether they're going to go back into something like and join the ruble. And so you see, this is Spurs Bank, one of the largest banks in Russia. You can see that they've created higher highs and higher lows. They had the huge sell-off. This, by the way, was when they were getting the sanctions put against them. They fall down. They've created a base down here all the way at $3, and they've recovered quite a bit. And so that could be the place they're going to go. We could see that move, that bullishness, could really push some strength into the ruble. We know that oil prices recovered off of their lows. That helps Russia as well. And as we're watching that, and it's helping Russia, that instead of creating the drachma, they may go over there. Now, as we're watching this, and as we're looking at those moves, and we're watching that change, I don't see the impact from Greece alone being enough. But I do see, like I said, it could be the vote of non-confidence and the European Union in its entirety. Now, we keep talking about the idea of selling right through here at 114.40. Let's go through a bunch of currency pairs and let me know on it if what I said makes sense to you as far as that goes. And what normally we look for is short term. Is it still breaking up? Let's try to do this one more time. So when we're watching this, one of the things that I do expect weakness in the euro, but I do think that we're going to see some volatility that's going to push the euro-US dollar back up into this resistance area. We have seen the dollar, with all the information we had and all the expectations of the default in Greece, stop right through here. And we can see it stops here. We can see it stops here. And as we're looking over 114, 115 area, that is where I'd be looking for it to stop. Now, using the method that we've used in the past, we've created these higher highs and higher lows through here. We've done this with the fibs before, and we're going to go through a number of currencies with the fibs. If we go off the higher closes through here, right through there, remember that can be a potential target. And if we anchor a reverse fib off of that and try to look at that, you can see it doesn't do a lot, so you have to duplicate that again and look how well that played out as the target. Great. Now as we're watching, this area right through here could hit resistance and push us a little bit higher to 115.16. We could see it retest all the way out into July. That means we're going sideways for a little while if we do that one. Now, what I've looked at, yes, that's higher highs and higher lows, but it's not my favorite. I would rather have a clear higher high and higher low, and so let's look at something like this. And let's combine this with the Fibonacci retracement off of the low close to this high close, and let's look for these to come together here. So now I'm looking for maybe some indecision, maybe a move sideways, but over here by next week, by next Thursday or Friday, if we trade sideways, I'd expect us to test 114, 150, 114.50, somewhere near here. If we test that and fail to break through with any type of energy, I'd be willing to sell up here at 114.50. However, there are this 50% level has been intriguing because we've had this resistance area near 118.85, but I'm a little bit interested in this area. If they have some sort of resolution, or if anything happens with the U.S. where we see a slowdown, or we see less demand for the U.S. dollar, this is where I would be willing to sell and just place an order with today, if I really wanted to. Right about end of mid-July. Oh, I'm on the wrong chart. Let's try that again. Low to high through here. Low close to high close. Fibonacci retracement from low close to higher low close. And as we zoom out on this, you're going to see these areas up through here. So out through July, mid to just past mid-July, 123.34, I'd be willing to sell that. Just sell off of those highs and let it go. Let's see what happens. But right here, over the next couple days, like I said, maybe the end of next week, is where I'd be willing to sell here. Now, the risk that I'd be willing to take is pretty minimal. We've done this before. We've missed this before. So this time we're going to put it almost exactly at this area, depending on how we see price act over the next week or two. As you can see, even with the Greek discussions, the Greek debt discussions falling apart, the euro didn't fall apart, did it? Nothing here. Didn't do much. So as we're watching right through here, I'm not convinced. If the market is pricing in a Grexit like everybody talks about in the news, it's not being priced in, at least not to cause problems. So let's look to see if it gets back up to 114.40, 114.50, and to see if we can get that sell-off right through there, and then look for it to fall down. And I'd be willing to sell up there. Now, the pound dollar is kind of leading the way and telling us that we still have a move higher, because the pound is still connected to the Eurozone. It's still part of the ECB. It does have some impact on the pound. This area right through here, near 157.92. Resistance back here, even a little gap there, resistance here. On the little pullback and extension that we did before, we have about a 161. Now that was just this run up, and it paused, give us one day down, and that breakout looks like it lines up pretty well at 157.92. So I'm willing to sell at that level. Let's go ahead and move this Fibonacci, and let's draw it from this high close. Oops, retracement, and then we're going to hit a bunch of currencies here. There we go. So from this high close to this low close, knowing that if it does sell off at 157.77, if oil decides to sell off at that point, then not only would I look for it to come back to 151.97, we'll call it 152. If it breaks through 152, we have a double top, so it should go from 157.77 to 152, which is going to be about 577 pips, and that would push us right back down to 146.15, back into these lows. But right now, we still see bullishness in the pound. Now, money's talking about API crude. Let's go look at API crude. Yeah, bullish on the euro US dollar, only up to about 114.50, 115, somewhere in there. Pound dollar, I am bullish all the way up to 157.70 and looking for it to retest that level. Now, we could roll over here, and that would give us a lovely lower high. And as money likes to, it's Gartley pattern in there potentially as well, and sets us up for another bearish trade. As we look at this compared to other currencies, we'll go through all the majors really quickly. We already talked about the Aussie US dollar, and we will come back to oil. Aussie US dollar had hit this low, rallied up, put in a high, came back, retested the low, and this 38% or 61% on the downside, 38% retracement off the high to the low is right about 78 cents. And you can see we're slowing down. every day it's getting less and less and less. So this bullishness here is likely to fail here, going back to gold prices. And we saw that money wasn't moving into gold. In fact, money was moving away from gold. We're not looking at this as an inflation hedge. What's my favorite instrument for growth? Copper. Let's go look at copper. Copper is falling apart. We do not have economic growth. We're not seeing it in the data. We're not seeing it in the copper usage. We're not seeing it in gold prices. We're not even seeing it in the usage of oil. Now, inventories are less of a drawdown, as the money is pointing out. It only drew down 2.9 million instead of 6.7 in the previous report, and so we're using less, right? China growth, is it really that strong? Because if the rest of us are looking at slowing down, then China is going to slow down. And as we're watching that move, I am not buying into it. We just don't see that information holding up. And so gold prices are struggling. Copper is falling and has broken out and dropping lower. Now remember, two things. We talked about the rally through here. We talked about the higher highs and higher lows. We talked about the fact that just because it broke the trend doesn't mean it's in a downtrend yet, but now that it's broken through and made lower lows, this is a downtrend. We have lower highs and lower lows, and I'm looking for it to bounce temporarily, retest 267, and let's look for it to get to 253 by end of next week. That's not strength, and so we could still continue to see some weakness in the New Zealand dollar, and we know that's driven partly because they cut rates, and partly because dairy farmers are struggling down there and commodity prices are falling. So now we have lower highs and lower lows. We have this sudden breakout. Watch for corrections in this, but I don't expect it to get above 72. So let's watch for a pullback, a retest to 70, 78, or even 72, but then continuation down lower. So the New Zealand dollar is certainly weakening and struggling more than the others. Pound, like I said, pushing higher, New Zealand pushing lower, and we expect that trend to continue for the next week or two. And the pound New Zealand is always a fascinating one. Super fascinating because of how the trends move. When we see breakouts on the pound New Zealand, if you can identify a trend, when it breaks through that trend, it will run until another trend is over. You can see you create lower highs and lower lows, and then you break that trend. And when you break that trend, this is one of the few that I say you don't necessarily need to trade or wait for the confirmed higher highs and higher lows, because when the pound New Zealand breaks its trend, almost any trend you want to draw, if you can identify lower highs and lower lows, notice this. Breaks out, great time to be in the trend, runs up. Breaks through the support level, becomes a downtrend. Notice it comes back and tests it, but it doesn't really make it much higher high, higher low. Breaks through there. When it breaks through that trend, runs up. Anchor the trend. When it breaks through that trend, runs down. This one is a little bit harder to anchor because you didn't really have a clear lower high. You might have come all the way over to here, then it broke out, and you expect it to be bullish. And it does this over and over and over and over and over again. We need to trade the pound New Zealand more. But as we're looking at this, this will happen repeatedly. Every single time it breaks the trend, it seems to do that. Now, some of them are more difficult, like this, where the trend is astronomical. This is a great time to use your Fibonacci fan the traditional way, not my reverse anchor, but the traditional way. When you see that it breaks the trend, great, anchor the low, start re-anchoring to the high close, high close, high close, high close until you get to the top point. And then when it breaks that trend, you have a downtrend. Okay. Now this is what your one fake out so far of the year, potentially. And right through here, traditional way, because you didn't really get a clean lower high and lower low. Breaks through the trend, that's the bottom, up it goes. And so as we're watching this move now on the pound New Zealand and trying to anchor where that could be, you can see it went sideways through there. It did give us a head fake and then really didn't have a trend to anchor to, but it broke through the high, telling us we might want to redraw our trend. And we're still in this really aggressive trend. Now there's a couple of trends that I could look at. We could look at this one right through here. And if you have a hard time identifying the upper trend, just draw the resistance area, and that can help you draw the support area. Cut that one off right there. So if we break through this trend or this trend, I'd be willing to short this. But as you can see, that pound New Zealand should continue to rise for another push higher. Where's that push higher going to go? These trends have been fabulous. We like these trends. Maybe a little push to 225. Just right through there. Not a significant move. This is a very aggressive Fibonacci fan reversal. But let's anchor that because this is going to give us a little bit of a target. We might look for somewhere up in here, 232, 233. But we can see that the trend is continuing. Watch for a test of 225. And we could have come back here and done a little bit longer term trend like this. But 225, 230, and then up there about 240. But really, just wait for the trend to break. Right now, it's continuing to move. And that pound New Zealand is continuing to rally, and we still have probably another push higher on that pair. So if I'm comparing to the US dollar, I'm going to go short the US dollar against the pound for the next day or two, but long the dollar versus the New Zealand, or just simply long the pound New Zealand pair. Now we've looked at the pound New Zealand. We haven't looked at the Swiss or the yen yet. Looking back here, ignoring that one spike. Old resistance becomes new support. The trend is still there. And as we're looking at this, even though it's not a great flag pattern, it pulled out back about half the distance. If we break through this resistance, right through here, if we close above this trend resistance, that is exact same as the previous trend, the same pattern, then we have higher highs and higher lows, we have a flag pattern, and then we could anchor this as a fib fan. Now, the Swiss has acted a little bit as a safe harbor during this time of uncertainty for the euro. As we're watching this, give it a day or two. If we close above this trend line, and certainly if we close above 93.87, then we have the potential for this to create higher highs and higher lows, but we still have this resistance area that we have to deal with. As we go, I would not be surprised at all to see the dollar Swiss reach 98.20 by the 1st of July. Dollar yen. Oh, let me go back to the dollar Swiss. I forgot to put my fib retracement on there, just so you can see what kind of a combo. And I don't know if this is the bottom yet. I think it probably is, but it's not confirmed yet. So, there you go. Let's get oddly specific. We could go all the way up here by the first week of July to 97.10. But we've got to get through this resistance area. And then we're going to start mixing and matching. The yen's been gaining a little bit of strength and then it's paused. What's the VIX doing right now? The VIX, remember, is the indicator that tells us whether there's volatility or uncertainty in the U.S. equities and bonds. But the VIX is also telling us fear. It's oftentimes known as the fear index. And so if we're looking at the fear index, we want to know whether fear is rising or falling, whether it's broken out of a significant area of what general uncomfortableness. And so the way I look at this, is this high or low volatility? What do you think? Prefer the horizontal resistance and support on the volatility. We can see it's hit there, hit there, hit there, hit there. Yes, it shot over it, gapped up and closed down, however, and had multiple resistance. This is just a general uncomfortable. This is a social awkwardness for the VIX. It's not really fear. It's relatively low, right? So this up here is just like one of my friends in high school. Socially awkward, struggling, but not scared. VIX is up. We're a little bit uncertain. This is an uncertain time. Everybody's struggling to decide where things are going to happen with the Eurozone and Greece, but it also plays into all the other markets, and people are hedging. And it's summertime. This is relatively low for summer. And so the VIX is up temporarily, but not up enough to be fearful. And if the VIX was higher and it broke out, remember this gapped up and closed down. So this is very much what we saw in equities. Equities sold off and then rallied back positive. This usually moves counter to what the equity market does. So as we're looking at that, gapped up, closed down, relatively high in the short term, but really low when we look at the big picture. So as we're looking at that, not a big deal. We expect the yen to be trading somewhat sideways, and if we see volatility come back down, this should break out and continue to move higher. This could be a lovely little bull flag right through there. Let's put a Fibonacci retracement on it from here to here, and you can see it's playing off that 38% level fairly well after it tested the 50. Now if it rallies, let's look for a swing high to 125.63, and then crazy enough, if it does break out, we would be looking at probably a bounce off the 128 and then a move to 129.66. If we look back historically, longer time frame, we have cleared the 10-year high. I don't know if you guys realize, if all of you realize that, but we cleared this 10-year high right back here. The highest point that it had been at prior in that 10 years was 124.13. Now, we're below that again, but we did clear it. Now, could it go higher? Absolutely. Let's see how far back we can go. There we go. This little 100% target puts us well up into this area. Not a problem. We could certainly hit that. We could go as high as 124 or 134.97. And if we look back all the way to the end of the Asian contagion, the dollar yen reached 147.65. That was a lot of weakness in the yen. Now the yen has shown better than expected GDP. Now, better than expected GDP, people say, see, it's finally working. Quantitative easing, 20-some years of quantitative easing is finally paying off. I don't think so. I'm not buying it. So as we're looking at that move, I still see weakness in the yen unless we see significant growth. Now, the greed and fear trade, the Aussie yen, that's the one. Aussie tends to be greed, yen tends to move with fear, and so this is my greed and fear trade. And this oftentimes plays out with equities over the long term. In fact, as I look at that bullish move in equities today and look at the Aussie yen as well today, this tells me that move positive in the U.S. equity market was probably short term and not going to last. In fact, what that tells me is we can pull these pieces again back to yours on it, is when we're looking at that big picture, if I'm calling the U.S. equity move as false, temporary, not strong, what I'm saying is I expect the equities to just travel to short-term resistances and fail, but I am also looking for, on those failures of resistance, to see the to see the bonds go higher. Bond prices, not bond interest rates, bond prices. And so if bond prices go higher, yields actually decline. There's more demand. People are paying for those bonds. They're paying higher and higher prices because they're looking at the U.S. as safety compared to the Eurozone. And so likely equities are a temporary bounce and bonds are going to come back down. So or go back up, excuse me. And that's partly because of what I'm seeing here. So if we see weakness in the Aussie, weakness in gold, higher volatility, then this should go down, continue to fall, and equities should follow. Or do it at the same time, not necessarily follow, but should do the same thing. As we're looking at this consolidation, this is not convincing that we've got a strong bounce. We had a great move earlier, but now we've paused, created an equal high. If anything, we have equal opportunity to go short as we do long. And it looks like it's leaning a little bit bearish. And so that being the case, then I would expect equities, one more time back to equities to do this temporarily. Let's see if it rallies up and trades to a resistance level through here. And if it trades to that resistance level, not the horizontal level anymore, but now this potentially is a resistance area, trying to hit those closes and that gap open and that close. So let's let it come up to this area. It's a widening pattern, and a widening pattern, or a megaphone pattern, as I've called it, and others have called it that as well. This tells us there's an emerging trend and increased volatility. Emerging trend and increased volatility to the downside, that appears to be what we're seeing. So let's watch for it to retest this gap, this horizontal high, let that push up to that area and fail at this area. And as it fails near 2100, then I'd not only be looking for a retest of this low, but likely an extension down to these lows. And it is hard for this to break out to the downside because that takes a lot of effort. But look for a test of 2040 with that increased volatility. All right. So we've hit all the major currencies. We've hit the pound New Zealand. We have hit bonds. So we'll go back to bonds one more time. Hit bonds. We already hit ES. Let's hit crude, natural gas, gold, and silver again. And like we've said before, this bounce, this rally, are we in an uptrend yet? Look at those closes. Oops, I can redraw it. Let me redraw that for us. Make it a little bit cleaner. There we go. So look at the equities. Equities have traveled up but haven't broke through a resistance, haven't broke through a trend, and we see a little bit increased volatility and the Aussie yen rolling over. And yet we look at the bonds, and the bonds are showing a breakout, potentially a higher close. Now, if we want a little extra certainty, let's at least break through this 3-day high, and that would push some bullishness. We'd probably look for the bonds to get back up into this area, right near 155. Well, higher demand for bonds means money's moving there and is moving away from other places, oftentimes equity, and continuation against currencies. So that looks fairly positive as we look for, or commodities, excuse me, as we look for commodities again. Crude stuck in the range, not breaking out to the top side, not breaking through the downside. We're using less as far as what was expected in the oil inventories. Copper is down, remember, so utility of these things could slow down. We're already seeing utility fail on copper, and we also know that demand hasn't necessarily gone up. This seems to be held up here by the speculators, trying to get that all the oil they bought down here liquidated out through here. Now, as we look at gold one more time, you can see sideways to down. Has created lower highs and lower lows recently. It's really quite flat though, so excuse me. I'm not going to be surprised to see a retest back down to 1145. It is creating some bearishness through here, so unless it gets through this resistance, and I probably even willing to let it trade sideways like it did back here, all the way through 1st of July, and then let's look for the bearish move down to 1150. Just reading really quickly. Natural gas, we hit gold already. Well, let's hit silver before we go to natural gas. Silver is at its support area, showing that bearishness through there. This looks like my stronger support near 1570, not this, down at 1542. And so if we can clear this level, let's not only look for a retest of 1530, but then a potential new low. And that's actually part of the reason why I also look at this as an indication that we're not seeing commodity prices recover yet. We've still got another push lower likely. Going to natural gas, we already looked at copper, we've already looked at oil. Looking at natty gas. Natty gas is doing a little bit better today, or yesterday, not today. But it hasn't recovered off the lows when oil has. As a substitute, generally you'd expect natural gas to follow it. Going to retail gas, and then we'll come back to the Fed. Retail gas back up that resistance area. Remember what I told you, simply go to your local gas station, look at how much you're paying in federal and state taxes on the pump, and then add that to this 215, and that should tell you what gas prices are. If you want to see how that moves. We had a fairly consistent rally, fairly consistent trend through there. Let's see where that goes. What we were saying is that if, as you're watching this, if you want to just add the price of your federal and state taxes to this price, 214, that'll give you the idea of what you're paying at the pump. And right now, that's going up, but we also know this is when they do all their maintenance on all their facilities. Now, going back one more time, we've seen the demand down on all these other commodities. And as we're looking at this, we see the money moving, and we see commodities except for retail gas staying at where it's at, staying stuck, or falling. Like I said, I don't see the money has gone bearish, right? And so it all sets up to see more strength in bonds, more weakness in equities, or failure to break through highs in equities. Even though the Russell's up, we know they're speculative. That's people are looking for a good investment, but you can see we still haven't broke through the highs. And so we're watching to see if that can hold. If we see money leave commodities, and we see equities fail to trade through their highs, we see the Russell stop here. We look at the NASDAQ and see the same kind of thing that we're seeing in equities. We even saw the Dow doing better, and the Dow was generally considered a safe harbor, not necessarily a growth play, and then we've seen it come back down to the lows. When the Dow was having great days last week, looked really good, very promising, but we're making lower highs and lower lows. I just don't see it as a long-term bullish stance. So equities are struggling and failing at these highs. So I want to see it fail at resistance. And the Russell moves quicker. I definitely get the idea when people are taking a bet, if they're going to bet on U.S. equities, they're going to push it to the TF. We did look at the natural gas. We can go back to natural gas one more time. And then I got to look at the Fed. We got to play the Fed this week, right? So here's the natural gas. As you can see, natural gas still staying in the long-term lows. I'd look for it to stay below 301. If it breaks through 301, I'd look for 330, but I'm expecting it to stay below 301. Yeah, you know, JY, I'd say the Russell is really on its own because people are betting on it. It's speculative. It's the speculative risk takers, right? The Nasdaq is based on whether people are betting on tech stocks. Still the same thing. SPY is the general market. That's why I always start with the S&P. And Dow is the I want to find a return, but not really caring how big the return is. I just don't want to be in bonds. And I'm looking for investments, right? And so that I think is what's really pushing that. Now let's go over and I'm going to change what I'm sharing here so you can see our trade tab. And I've shown you this before. This is the way you know what the Fed is going to do, or at least what the market has priced in that the Fed is going to do. And I know many of you have seen this, but I have also seen some people comment, "This you don't know who I am, and you've never been here before." And that's all right. I welcome you. But what we can do is we can take the ZQ. The ZQ is the Fed Funds 30-day futures. The Fed Funds 30-day futures, if you take 100 and subtract any of these prices, that will give you an idea of when they're going to cut rates. In other words, what we're looking for is 100 minus this is 0.13, right? 0.13. As we're looking at 0.13, that tells us that we're somewhere between 0 and 0.25%. That's what we expect. And that's what the market is certainly offering right now. They say the Fed's rate is between 0 and 0.25. But when we see money move and put it up to 0.25%, when this gets down to 99.75, that's when the market is pricing in the futures that they expect the Fed to have a higher rate. And as you can see, it's almost there in September, but it is there in October. So in September, there's a high likelihood, 99.8, so it's almost there, but it's a lock by October. But these numbers all edge a little bit higher. If these numbers edge up any faster, if you see these move quicker tomorrow, and if they're positive, then what they're doing is they're betting and laying bets on the line that they expect that the Fed is not going to be raising rates in September. They're even possibly going to push it out even further. And so watch for these numbers to be increasing, or these numbers right here to be increasing, getting further away from the 99.75. If that's the case, then the market is betting against no rate hike in September or October. And if that's the case, you can see you'd also look back out to November and December. Just make sure it says futures all on the ZQ, and that will give you an idea of when those rate cuts are or rate hikes, are going to take place. Now, out to January and February, we have to go all the way out to February to get a 99.5. So a second rate hike. But I did hear some interesting commentary that one of the Fed governors said it really doesn't come down to growth numbers. We just can't have a 0% rate forever. Right? That's where the issue is. And so they may not need to see the numbers, but I think right now they are watching the numbers, and if we don't have the growth, then raising rates would just put the kibosh on whatever growth there is there. Right? Let's take a look here. Yeah. The Dow, Apple. Nasdaq, Apple, right? Apple's a big part of those, but not part of the rest because the small caps are there. Let's see. Yeah, and GFC, I would agree. If I had to bet right now, these numbers are going to increase. And I think what it is people aren't willing to put this is people willing to put the money behind the bet, right? That's what this is telling us. The traders, the investors are willing to put money where their bet is, money where their mouth is. And so when we're seeing this, it's not a matter of they're speculating. This is where they're willing to put money on the line. And right now, they're willing to bet on September, October, but I think you'll see them kick the can down the road as we get closer. Let's wait till August and September, and then that's when I'd really see, end of August, watch for these numbers to increase quickly, and then we're going to probably be looking November, December. All right. IMF, yeah, IMF has a lot to do with it. They and the World Bank Organization, they all have their comments. Trump running for president, he'll fix things. That's right. He and his flowing locks. All right. Let's go back to the charts really quickly. We haven't mixed and matched our pairs yet. So if you recall, we're expecting a strength in the pound, some temporary strength in the euro, but we expected weakness in the Aussie and New Zealand in the short term as well. So even on something like the Euro New Zealand or Euro Aussie, the Euro Aussie pair and the Euro New Zealand pair, there still could be another push higher. So as we're looking at this, and I'm not going to do this as a Elliott wave type of situation, but we can see that we've rallied up, pulled back and retested before we've reversed on some of these. Others we created a V-type reversal. This is not one of those setups for a V-type reversal. And so as I'm watching the Euro Aussie and combining this, are we seeing inflation fear? Well, the Euro Aussie has been rallying. As we're looking for this, I would expect it to retest, push back up into this area. There's the closes, and we could push a little bit higher, but I'm going to look for a retest of 147.50, 147.70, and then I'd be willing to sell that and look for Euro weakness, Aussie strength, and look for that to be happening at the same time that the Aussie US dollar is testing its low again down here. If the Aussie tests this low at the same time that euro hits that high and gold prices find its lows that we've already talked about, going back here to the gold prices right around 1169, if not down to 1150, there is the euro Aussie short that could play for weeks to months, and that could play in one more time back to the pound New Zealand at the same time it's pushing up to the 225 226 area for one more push higher, and then look for that to fail. All right. Yeah. All right, we've hit crude oil. Let's see what if we missed anything at this point. Oh, you want to mix the we've had the Aussie yen. Pound Swiss. Which European currency is going to win out? Pound Swiss traded flat from here all the way through here and back down. Let's do a channel on that. I need to get the right measurement here. Right through here. Okay. If we go off those closes, it gave us a lovely retest right there. As it's done that, this size of a channel, as we're watching this, notice this is about the same size channel that we're dealing with here. So price way overshot, got back into the pattern, and you can see it's tested the same support and resistance areas. It's shot through it before, but as it's come down and bounced here, let's look for the pound to be a little bit stronger up to this level. Now this is where the uncertainty comes in play. Geopolitical uncertainty tends to favor the Swiss. So if oil prices stop rising, the pound Swiss likely stops here at 146.80, and we start leaning into the Swiss more than the pound as that safe harbor currency. And the risk for this, you can see the shadows push through here. I always like to look at where, if I'm looking at the bodies, closes here, gaps and closes, how far did it push through before? As we're looking at 142.25, where this support line is, the low was 141.39. So we need about 90 pips for this opportunity, but the channel height is about 470. So if we test this resistance and stop there, intraday or otherwise, if we place a stop loss of 100 pips or 90 pips, we have an opportunity for 470 just to come back down to the lows. So the risk for reward is about 5 to 1. And that could be a real opportunity. And like I said, I do like this short there, and like we talked about a little bit in the email on it, is this area. I think we could get one more push higher while we try to figure out what's going to happen with the euro, and that's why I like 114.50. I don't want to play with the shadow anymore because we missed this turn before, So I'm probably going to look for one more bullish move and then set our short order about 114.40. Give us a little bit more room to play off this long-term trend resistance, but looking for it to come not only down to 105.60, but this could be the time that we look for the lower highs, lower lows, breakout, and then a continuation all the way back down to parity. If it does break through 114, 115, I would be willing to sell again, depending on how fast it rallies to this target line near 118.80 or 119.90 or 123, depending on how it's rising and when it hits this combination of Fibonacci retracement levels and the trend extension. Those are the areas I'd like to look at. Reed, I do. Maybe I need to make one and post it to the Shadow Trader website. Let me see if I can put that together. All right. You know, Dr. Joe, there may be some truth to that. Get someone from outside the establishment, right? Yeah, the sound is better, right? It's just when we lost sound, that's the issue. But no, we figured out what the problem was last week. This is a different set of troubles as we're looking at that. So that's what I'd watch for. We should have certainly everything clean or continuing to be better next week. Shouldn't be an issue. Yeah. Reed, would you do me a favor? Send an email to fxtrader@shadowtrader.net with that idea, that comment, and we can try to work that in. And so that way it'll be in a recording and have something posted for you. They fed the gremlins, huh? All right. Really quickly, ZN. I know we're out of time, but let's come back here. ZN. This is the 10-year. I want you to note where we're at on the 10-year. We've rallied up, stopped at previous support and resistance. Give yourself some leniency with that, because we've hit there, gap there, hit there, close there, and we're right there again. This is a key area. If it breaks through this resistance area, then bond demand goes higher. I would expect equities to sell off. I'd expect, or at least pull back for the next couple of days. And I would expect bond prices to get back up to 126.60 or 126.28. That means we should see yields come back down. Yields come back down to this level, meaning the support levels that we saw, or excuse me, the resistance levels we saw on the TNX should match the support levels we saw here. So let's look at the resistance levels in May on the TNX, so we can get an idea of whether, if you're refinancing, if you're a home builder, if you're a construction person, if you're in banking, where are those opportunities? What's the yield spread? About 175 to 200 basis points. In other words, about 2%, and 1.75 to 2%. So these resistance areas right through here give us a target about 226. Not a big drop here, but I would look for a little bit deeper drop down to about 215. So watch for this one first. It's not the best one, because it matches the May resistance areas. So watch for it about 225, which is 4% interest rate, or one more push down here, which will put you back into the 385s. Dollar Mexican peso. Remember, we looked at silver, so this is going to give us a little bit of indication of what that's looking like as well. You can see we pulled back to this consolidation. This short-term support looks like a potential bull flag, but remember, if it ever closes beyond the 50%, it's anyone's bet. So let's throw a Fibonacci retracement on there. Right through there. So we're right here in the consolidation area. It closed below the 50, so now if it closes above 38, I would expect to swing high back up into this area. In fact, let me move that down just a smidge. Yep, still closing through there. Still testing that. So if it breaks out, let's look for not a long-term trend, but just a swing high, about 1570. If it closes below 1527, then we drop back down to 15 even. And like I said, with silver is fairly weak. And if we move down a little bit lower, that would be dollar Mexican peso up. So look for that swing high as silver reaches these lows and retests the lows. You didn't see the fibs on that? I not sharing that screen? Oh, I'm sharing the other one. That's right. We shared it. Let me change that. When I change from one to the next, so I can show you that trade tab, it throws off which charts you're seeing, even though it's recording what I'm drawing. So if this was the fan or the flag, it pulled back past the 50%. Watch for it to break above the 38, close above the 38, and then you swing high up to this level. Or break through there, back down to the lows, and that ties back with silver down to these lows right through here. All right. Yeah, we hit crude a couple of times, 2 or 3 times. One last time for crude. Crude stuck up here, even though our inventories are showing that we are still decreasing our inventories, which might try to push this higher. We've really been stuck between 57, 58, call it 58 and 62, all the way back through April. So really not breaking out. Turned the corner a little bit today, but it's stuck sideways. And this feels like speculators, not change in demand. Speculators that bought all their oil and have them in containers down here. Yeah, everybody wants to talk about crude, don't they? Once again for the TNX, because you didn't see those. TNX, I wasn't using fibs on it, I was looking at this previous resistance in this support area. But if you want a fib on there, you see it's right about there. But I'm watching for these resistance areas, 220, 225, and then the next one would be down here about 213. So there we go. All right, thanks everybody. Thanks for being here. We'll have this posted, and we'll see you all next week. Same time, same place. If you have questions, get me emails to fxtrader@shadowtrader.net, and we'll take you out with some music. Thanks everybody. Have a great week.